That meant that if you wanted to open up an account at Merrill Lynch or Morgan Stanley, you had to prove that the money you're investing, if you lost 100% of it, would have no effect on your standard of living for 5 years. If you're using a mental stop order, you are mental. It makes no sense. It's absolutely ridiculous. Don't do it. We live in this world where we're dislocated through social media, through algorithms, and through all the technology separates us from one human from another. But when it comes to money and the point of execution, having a human being on the other end of that is pivotal.
Alors, j'ai été invité au cœur de Wall Street, au New York Stock Exchange, par quelqu'un qui s'appelle Peter Tuchman. Alors Peter, il est aussi connu sous le nom du Einstein de Wall Street. C'est une figure emblématique, iconique de la finance et de Wall Street. Tu le vois littéralement dans tous les journaux, Financial Times, Bloomberg, donc tu l'as sûrement déjà vu passer. Pour te donner une idée, d'autres noms qu'on lui donne, notamment sur son Wikipédia, sont le trader le plus photographié de Wall Street, le stock trader le plus connu de Wall Street, le stockbroker le plus iconique du New York Stock Exchange, le broker le plus photographié de Wall Street et le courtier le plus reconnu du floor de New York Stock Exchange. Peter, c'est quelqu'un qui a presque 40 ans d'expérience dans le monde de la finance et qui va aujourd'hui te partager les secrets pour réussir en trading et plein d'anecdotes et d'histoires qu'il a pu vivre à Wall Street.
Okay, so here, guys, we're in the balcony of the New York Stock Exchange. Okay, the greatest financial institution in the world, built in 1903. The ceiling is all gold. The walls are all hand-cut Italian marble. Come into my world. Come into my life. So, it's kind of exciting to note. I'll give you a little breakdown of what's going on. So this is an incredible room, right? It was built in 1903. I can give you the whole, you want the history, you want the whole thing, I'll give you the whole story. We are here on the corner of Broad Street and Wall Street. Okay, New York City, called New Amsterdam, 1650, right? 300 years ago, there was a wall on Wall Street. There's a statue of George Washington where he was inaugurated first president. Behind him is the Federal Reserve Bank.
Yeah.
Okay, this is Broad Street. Broad Street goes from here to Lower Manhattan. Lower Manhattan is the apex of the East River and the Hudson River. It's the bottom of Manhattan. Manhattan is shaped like an oval.
So that would be the financial district.
Well, that's where financial district is, but also before this district was really here, in the early 1600s, all the boats used to come in from all over the world with merchandise on them, tobacco and lumber or whatever, spices, God knows what it was. And there were already in the 1600s brokers. Okay. Right, who used to meet them at the shore, at the port, with wheelbarrows, and they would bring their commodities up in front of this building. Before the building was built, it was called the Buttonwood Tree, and then they used to do trading there. Right, that was how it went on. That was the sort of the crossroads of where the concept of putting buyers and sellers together, having a trading community. So this went on from 1650 to 1797.
Okay.
In 1797, they wrote an agreement called the Buttonwood Agreement, which basically laid the business standards going forward, that these 26 brokers basically controlled the corner. We charge a certain amount of money, we have a standard of business practice going forward, and things are going to be done this way forever. Then in 1850, they built a building here called the New York Stock and Exchange, and then they built this building in 1903. And so this place started, the concept of trading and brokers is basically there are brokers. In 1903, they issued 1,366 seats on the stock exchange. To have a seat on the stock exchange gives you the right to become a trader, right? And then we have what differentiates us from other markets are market makers, right? Market makers.
So NASDAQ doesn't have any market makers, right?
NASDAQ does not have any market makers. There are a few other exchanges around the world that used to have market makers, but nobody like we do, where they really play the role that we have, where they inject liquidity. They're there to create a smooth and active market.
To reduce volatility compared to NASDAQ, for example.
Correct. They are there to dampen volatility, 100%. If you go to NASDAQ, you're going to have stock come in for sale. It's going to go sell down until it finds a public bid. If it's on the upside, it's the same way. Here, that's not going to happen. We have certain parameters, 7% and 10%, where we actually have circuit breakers.
Alors un circuit breaker ou coupe-circuit, c'est un mécanisme qui permet d'arrêter le trading, d'arrêter toutes les transactions après une chute assez conséquente du marché. Ça a pour but en fait de freiner un petit peu la folie des traders, la folie des investisseurs qui sont en train de short sell, parce que généralement quand on voit des chutes très agressives, tout le monde est très émotionnel. Donc ça a pour but justement de faire une pause, que tout le monde puisse respirer et revenir au trading. Donc on a plusieurs niveaux, il y a 3 niveaux de circuit breaker. Le premier qui est atteint quand le S&P chute de 7%. Donc quand on a 7% de chute dans une journée, on a une pause, un premier coupe-circuit de 15 minutes où on ne peut pas trader pendant 15 minutes, histoire de récupérer un petit peu nos esprits. D'ailleurs, si ce circuit breaker arrive après 15h25, il n'y a pas de circuit breaker, mais donc c'est tout ce qui est avant. Si le premier circuit breaker a été atteint, le marché réouvre 15 minutes après et on rechute, cette fois-ci on arrive à moins 13%, on a de nouveau un coupe-circuit qui arrête le trading, qui arrête les échanges pendant encore une fois 15 minutes. Et après que le marché réouvre, si à nouveau le marché continue à se péter la gueule et qu'on arrive à moins 20%, on a le troisième et dernier circuit breaker qui là tout simplement arrête le trading pour cette journée. Comme ça, tout le monde peut dormir un petit coup, se réveiller le lendemain et reprendre à trader de manière normale, un peu sans les émotions.
There are guidelines.
Which was a frequent thing in 2020.
Absolutely. Look, if you traded GameStop
I can remember.
in 2020, we stopped trading GameStop 29 times that day, right? So you look, the having market makers is huge. It is added value in a huge way. Companies that go public on NASDAQ today really suffer from that lack of the injection of liquidity and the dampening of volatility and the fact that we all often have circuit breakers, and you will actually have someone at the point of execution, boots on the ground, putting buyers and sellers together, opening up the lines of communication and making it a place where trading should happen in a fair and orderly fashion.
Yeah, okay. And so now, I guess I can't see 8,000 people, so I'm sure a lot of people have been replaced. Who are the main players at the moment on the New York Stock Exchange?
If you look at any business over the last number of years, technology has replaced a lot of human beings in any industry. Branding, marketing, advertising, media, in whatever it is. So while we don't have 8,000 people, I would say probably in the mid-2000s it went down to about 3,000 or 4,000 people. Now we probably have 800 people. What ended up happening was there was a lot of mergers and acquisitions among market makers. When I got here, there were 70 market making firms, right? They were all family owned, and basically it took a lot of mergers and acquisitions to be able to support the capitalization by market makers. So a market maker is putting his own money in the market to participate and to create a smooth and active market. He has to put money, he has to have money in the bank to support those trades. If there's 3 sellers and 2 buyers, he has to buy stock to make a trade. 3 buyers, 2 sellers, he has to sell stock to make it. So he needs money in the bank. So what ends up happening was there were a lot of mergers and acquisitions. There was not a demand for 1,366 brokers because of technology. A lot of things are being done on using algorithms and whatnot. However, the necessity of human beings in the market is way more important than it ever was because of what we've seen during COVID. You're seeing markets that are down 1,000, up 1,000, down 1,000 all day long. And so having a human being at the point of execution is incredibly important. So like any industry, we have outsourced humans to a certain extent, but you don't see a crowd here as much, although in the opening, there was a crowd this morning. There were hundreds and hundreds of people. And you will see it during the day from 10 o'clock to 2 o'clock. It's sort of algorithm time. People will put their order in sort of a set it and forget it mode. Okay. And then around 1:30, we start to get busy again. And you'll see a lot of people. Hiding in the nooks and crannies of the room are brokers actually doing a lot of work, planning their trades for the afternoon trade, and actually doing business. Any industry has sort of been outsourced by technology in a way. In my opinion, it's a little disappointing because I loved the energy, I loved the amount of people. But I really believe that our importance as a human entity, we get the job done. We are the greatest IPO market in the world. The New York Stock Exchange is price discovery. There's nowhere like it. We've opened stocks better than anywhere else in the world. NASDAQ, stocks go there, they open there, and then they tend to fade because there's really nobody there supporting it. And there's no interchange of information that's super important to make things go here. I can get an order in Abbott Labs. I can get an order in Wells Fargo. I can have 1 million shares to buy for an institution. I can go right there, you can see it. There's a guy, his name is Maloney. He's standing behind Wells Fargo there. He's got all the order flow to put buyers and sellers together, right? If I have an order to buy 1 million shares in Wells Fargo, I will walk in and talk to him. He will tell me who's been in the stock, buying it for the last few weeks, who's been selling it, where they live, where are the bodies buried, where are the players in the game, how has it been acting. That kind of information cannot be told by a machine or an algorithm. That kind of interchange of information
has to be
between
human.
a broker and the market maker is so valuable. It's so valuable for hedge funds. It's so valuable for high wealth people. Look, we live in this world where we're dislocated through social media, through the internet, through algorithms, and through all the technology separates us from one human from another. But when it comes to money and the point of execution, having a human being on the other end of that is pivotal, right? Because look, I can have 1 million shares to sell, and I can put it in the system to sell, and I can only display 100 shares at a time. So nobody really knows what I have, right? At the end of the day, the best way to really get stock executed and on the tape in a reasonable and having a good fiduciary responsibility on the trade is one human being to another. And so I think, unfortunately, the outsourcing of human beings in that mode has sort of done a disservice to the stock market.
I see.
But anyway,
you know, I'm actually so happy to be here. I can't believe it.
Look,
I honestly can't believe it.
It's the greatest room in the world. The history here is incredible. You know, everybody from, you know, I don't know, Jamie Dimon to Teddy Roosevelt to DJ Khaled have walked on the floor of the stock exchange, right? It basically, even though we don't do the volume we used to do, we are the #1 pricing exchange in the world. So in that way, we're super important. Stock is executed here better than any place else. The IPO market here is done like no other place in the world. So, you know, look, we watch technology take over lots of different industries, but, you know, I think we have, as brokers, the stock exchange itself as an entity and as an institution has put a lot of time and effort into maintaining this place as a human marketplace, and I think they've done an amazing job at it.
That's awesome. I have a couple questions that will really interest my community.
Okay.
So first of all, you're probably the most photographed trader on Wall Street. Photogenic trader on Wall Street. Can you firstly present what do you actually do? Like, what's your actual job?
I started here in 1985.
Yeah.
I got my first job as a teletypist on March 23rd, 1985. I had done all kinds of things. I got a degree in college in agriculture and in international finance. I moved back to New York. I was trading commodities. I opened up a record store and I was going to get a master's in business.
Okay.
I never finished the master's in business. I ended up moving to Africa for 2 years. I ran the accounting for a Norwegian oil company called Saga Petroleum in the People's Republic of Benin. So I did that for a year in change, and then I came here. I was 26 years old. It was time to, like, you know, put on my big boy pants and get a real job. So my father had a patient who worked for a company called Cowan and Company that got bought out by Societe Generale a number of years ago. And so I got a summer job as a teletypist. I was a option clerk, a backup clerk, a retail clerk, an institutional clerk.
Alors un clerk à l'époque, c'était un employé qui assistait les traders et les brokers au New York Stock Exchange dans tout ce qui était tâches administratives et opérationnelles. Donc il était chargé des transmissions des ordres, des communications, des tenues des registres. On va dire c'est un petit peu l'antécédent aux communications numériques qu'on a aujourd'hui, et c'est pourquoi on n'a plus de clerks aujourd'hui.
Then I became a broker. Historically, it used to take 10, 12, 15 years to become a broker because it was a job nobody really wanted to give up. It was a great job. You made money. You got to work here. It was amazing, and so it took a long time for the chain of events and the clock to move on, so that you could actually become a broker. But that was everybody's goal when they came down on Wall Street, is to become a broker. I got lucky. It took me 3.5 years. One guy died, one guy retired, one guy quit, and I got a seat. I got a seat in 3.5 years. So ever since then, I've been a broker. Right, I've done numerous different things. I've been an institutional broker, a retail broker for Cowan and Company. So that's a real, you would call me as a house broker. I would be buying and selling stock on behalf of Cowan and Company, an institutional brokerage firm. Then I moved on to do a convertible arbitrage. So I did that for a while, and then I went out on my own. as a broker, and then I've worked for probably many different firms. And then about 16 years ago, I developed I built a trading strategy around the S&P 500 and some information that I have access to.
Towards the closing of the session.
Towards the close, right. It's called the market on close imbalance. So as a broker, what do? I wake up in the morning, I come to work, I avail myself of as much information on economic data of what's going on in the market. You know, I'm not a big reader. I'm a bit of a spectrum brain, so I just listen. I love to listen. So I'm listening and just checking out, you know, through different sources I have, getting all the information I can. Economic data, super important. PPI, CPI, all that kind of stuff. Then I come into work, and for the opening bell, I'm able to see order flow that comes into the New York Stock Exchange. So I do a trade on the opening relative to where the S&P is trading pre-market and where the S&P is going to open up in New York. It's a little more complicated than we can do on this conversation, but it's just a trade. And then for the most part in my day, I am basically executing stock on behalf of institutions and customers and hedge funds, buying and shorting stock and buying and selling stock in the 3,000 plus companies that are publicly traded here on the floor of the exchange.
Understood. And as you've had so much experience on the institutional finance side, being literally on the New York Stock Exchange, tell me, is there a secret that retail traders do not know which keeps them from being profitable?
Well, it's a good question, but I would word it in a different way. So look, I run a day trading academy with my partner, David Green. It's called Wall Street Global Trading Academy. I am the moderator in chief. He is the teacher. We met here on the floor in 1985. He became a market maker in some of the bigger stocks, IBM and Bank of America. He ended up retiring at the age of 38. We've been friends ever since. He went home to day trade. So when COVID came along and we saw the opportunity with all these, you know, look, there were tons of barriers to entry for hundreds of years for the retail investor to get access to the floor of the exchange or access to the market to trade, right? You had to be an accredited investor in order to get an account open at a brokerage firm. That meant that if you wanted to open up an account at Merrill Lynch or Morgan Stanley, you had to prove that the money you're investing, if you lost 100% of it, would have no effect on your standard of living for 5 years. Well, nobody but rich people can say that. What happened around COVID time was, with the event of Webull and Robinhood and all these free trading apps, suddenly all the barriers to entry were gone. Everybody with an iPhone and $100 could suddenly trade the market. That's a great thing. Unfortunately, the downside was that none of these platforms offered education into how do you actually buy and sell stock, right? Do you listen to Uncle Herbie on the internet? Do you throw a dart at a wall? Do you just buy and short stock and hope it works out? Well, those are a mistake. And 8 out of 10 people who try to day trade, 8 out of 10 retail traders who try and day trade the market end up losing and end up blowing up their trading account. There is this premise that retail traders think that me having access to the floor of the exchange or institutional traders have an edge over retail traders, and that's why they're making all this money and they're losing all this money. And that is the biggest misnomer in the world. It is not a fact at all. The unsuccessful retailers, the retail traders, are all making the same mistake, and that's why they're not successful. There are 5 key secrets to successful trading, and there are 5 major mistakes that retail traders make. First of all, retail traders use mental stop orders and not real stop orders. Well, that's mental. If you're using a mental stop order, you are mental. It makes no sense. It's absolutely ridiculous. Don't do it. The next thing is not having a plan when you get into a trade. Why am I buying this stock? Why am I shorting this stock? Ask myself that question. Am I doing it because Uncle Herbie on the internet told me to do it? Am I doing it because I'm throwing a dart at a wall? Am I doing it for no reason except I'm taking a chance? These are not sustainable. FOMO, hype, hope are not sustainable trading strategies. There's only one reason to get into a trade, because price action and technical analysis told me to do it. Get into a stock on technical analysis and price action. Have a stop order on every trade, okay? The minute you start making money, start taking a profit. If I'm in the trade, I'll be very basic with you. If I buy 100 shares of XYZ at 50, if I put an order in to buy 100 at 50, I have a stop order in at 49.5. If the stock goes against me for whatever reason, It could happen. News could come out. Jay Powell can say something. It doesn't matter why. If I lose my 50 cents, I get stopped out, I move on to the next trade.
Yeah.
However, if it goes up to $50.50, I sell half of my position. I move my stop order to break even. Now I've not only made 50 cents, but I put in a stop order to protect. Now I cannot lose money on the trade. Trading from a point of confidence where I've made money and I can't lose money builds an amazing level of confidence and discipline in my mind.
Yeah.
So, and then use a stop order or brackets, a trailing stop or a bracket order to get the most out of my winning trades and the least out of my losers. Retail traders, they don't have a plan when they get into a trade. The minute they see a little bit of green, they get out and they jump around the room. I made 20 cents, la, la, la. But they won't stay in a winning trade long enough, but they will stay in a loser forever. The stock, they buy it at 50, they don't have a stop order.
They get in for a trade.
It goes to 48, they buy more. It goes to 46, they buy more. It goes to 44, they buy more. They're averaging into a bad trade. They're blowing up their trading account like that.
Yeah.
So having a plan when you get into a trade, having a stop order on every trade, start to take a profit when you can, not when you have to. And raise your stop up to break even, or even raise your stop up to lock in a profit. If you're having a bad day, if you have 3 losing consecutive trades, you turn the machine off and go home. It doesn't make you a loser, doesn't make you a bad trader. You will come back from a bad day. You'll come back from a bad week, but you will not come back from revenge trading.
One of the things I've had in place since ever and saved me in the markets for the last 8 years has been having essentially daily stops in terms of risk and weekly stops as well. And the way I personally trade and the way I show people how I trade is, personally, I'm good at fundamental analysis. So reading macro, then executing with price action. That will give me my execution, the stop, the target, managing risk, as you've said, having trailing stops. And yeah, just taking small profits after small profits.
That's it.
And keeping risk as slow as possible.
Singles and doubles. If you're sitting around, the other thing is, if you buy a stock at $50 and you watch it go to 53 and you do nothing, right? And then it goes down to 48. What are you going to do? You've now turned a winning trade into a losing trade. You're going to buy more, and then you're going to buy more, and then you're going to blow up your trading account. So at the end of the day, if you have 3 losers, you turn the machine off.
I personally don't day trade stocks. I do invest in stocks for the long term, and I try to automate this as much as I can, because as we usually say, what's easy to do is also easy not to do. However, my day trading is only done on FX. And I only trade currencies with macros. So stocks, I actually never day trade stocks. What's your opinion on FX?
I have absolutely no opinion. Equities. I don't know anything about it. You know what? I mean, I don't know anything about foreign exchange at all. Equities are my world and my life. The S&P is what I trade. You know, I've learned long enough, I've been around long enough to know that I don't need to be a specialist in everything. You know, I don't like to know something in a half-assed way. I spend a lot of time, you know, look, it takes 10,000 hours to get good at something. My best advice to young people is find something you love to do and then get really good at it. I've lived my whole life that way, that there are things I'm really good at, there are things I have no friggin', I don't own a computer, I've never owned a share of stock in my life.
Under your name, you mean?
No, even not my name, just I don't own shares of stock. As a trader, I'm not allowed to be in a trade in a stock for myself and for a customer in 30-day period.
Understood.
So 25, 30 years ago, I decided I make good enough living as a broker for other people, a commission broker, so I don't trade the market for myself personally. There's so many people who this whole thing, the democratization of the trading community that happened during COVID, the fact that all the barriers to entry are down, that anybody with an iPhone and $100 can now trade the market. It's two-sided in the way that people were not educated in financial literacy, if you want to use that term. I don't like the term that much, but learning how to trade, getting the playbook on how to trade, like you know how to trade FX, I know how to trade the S&P 500, right? So there are a lot of people, a majority of which end up blowing up their accounts. They don't know how to trade, they lose money. So I think it's a great thing that the barriers to entry are down. I really wish that all of these platforms had an educational arm to them, right? So that, look, I use the analogy that if I wanted to become a pilot, right, I wouldn't go to the airport, grab the keys, and hope that I could fly a plane, right? I would study. I'd get 100 hours of study under my belt. I would, you know, get in a plane with a co-pilot and I would fly for 250 hours before I ever so much as sat behind the wheel. Same thing here. There are certain rules and disciplines and consistency necessary to be good at this. It's about money. You're losing money. There's nothing worse than losing money. There's nothing worse than being up $500 and end up going home, you know, down $1,000. One of the other analogies I often use is like there are two kinds of gamblers, right? There's the guys who go to Vegas, right? You play cards? You ever go to Las Vegas?
I absolutely hate gambling,
Yeah,
and I think
so
that's because I grew up with the finance side.
Right, so I don't either. I've never actually sat down at a poker table. But there are two kinds of gamblers. There's one who's a disciplined gambler who has $1,000. He sits down at the table, he makes a deal with himself. If I make $1,000, I'm gonna step away, close the book, go take my family to a great steakhouse, go see a show, and have a nice room at the hotel. That's a responsible gambler. There's another kind of gambler who is an irresponsible gambler, just the same with trading. Someone who goes in with $1,000, does not have a plan, is up $1,000, he thinks he's got diamond hands, he goes in, he's up $2,000, he's up $3,000, he starts doubling his bets. He's not trading 200 shares, he's trading 1,000 shares. He gets irresponsible with his trades and he gets sloppy. He's suddenly up $5,000, he thinks he's the greatest thing in the world. Next thing you know, he's been to the ATM 4 times, he's down $8,000. He doesn't have enough money to pay his rent. He's sitting out on the corner smoking, you know, Gauloise and drinking friggin' Hennessy because he's all messed up over it, right? Same thing with trading. This is all about money. It's about being successful, making some extra money, it can change your family's life, right? And what I found is, it's the question you asked me, is people who are unsuccessful at doing this love to blame someone for it. There's nobody to blame except themselves. The stock exchange has built, and the SEC and FINRA, whatever it is, have built guidelines, stop orders. They didn't need to give us stop orders. What a gift. They've built us guidelines to protect the downside so we don't have to lose money, or we can identify how much money we're willing to lose. Think about how exciting that is, to be able to buy a stock at 50, okay? And then it gets to 50.5, have a stop order. Now I cannot lose money.
Have a limit price at which you know you were wrong, and
exactly.
being able to accept
exactly, and then get out of it then. I lost 50 bucks. It was a bad trade for whatever reason. I don't need to ponder it. I don't need to blame anybody. I move on to the next trade. There are hundreds of trades a day that you can get in for the right reason. But the psychology of trading, it's another thing that David teaches at Wall Street Global Trading Academy, is the psychology of trading. That is the most important. Anybody can learn how to hit a buy button or a short button. It's what you do when you get into the trade that matters. The psychology and the discipline and consistency of what you do when you get into a trade is the most important thing.
I usually always say, but so many people think the psychology side of things is a second part. However, when money comes into play, that's really when emotions start to show up. 100%. And I always say it's not the smartest person that makes money.
There's a great line, if you've ever seen the original Wall Street movie with Michael Douglas, the first one, right? Where he says to him, Gordon, don't get emotional about money, right? That's the worst thing you can do because you will then make mistakes. And look, and I'm not saying that this is easy at all, right? The whole narrative, the psychology narrative of trading is really, really difficult. We don't have anyone standing over us in our home with a 2x4. When you do something stupid, he whacks you in the head. Although I would recommend a lot of traders do that. Spend 50 bucks, hire a guy, and every time you do something stupid, like move your stop order, not have a stop order, right? Not take a trade when you need to, stay in a trade too long, average into a stock, pay the guy to smack you in the head with a bat. And you probably save yourself a whole bunch of money.
I think that'll probably be the best tip. Going back to what you were saying about retail trading and the fact that people always blame someone else. Have you heard about the smart money concept?
No.
Nope. Okay, great. It's that idea that essentially market makers are here to catch retail traders' stop loss for liquidity for the big institutional traders. As you've explained, all of these people are market makers.
Right.
You're close to them. Is that a thing?
No, well, that's kind of what I said to you. They are way too busy. I've known market makers for my whole life. They are not bad people, and I talk about this in every conversation I make, right? They are not here to screw you over, take a stock down to your stop order, take you out on your stop order, and then run the stock up. Trust me, they're being ruled by their P&L. They're there to make money, and they're there to create a smooth and active market. They are way too, no disrespect from your 100 share orders or your 10 share orders. They are there to make money for their firm and keep the stock smooth and active. They are way too busy to be worrying about screwing over a retail trader. It is not what they do. David Green, my partner, was a market maker for the longest time. I deal with, they're actually here to benefit you. They're actually here to make a market. They're actually here to tighten the spread, right? Does everyone know what a spread is? A spread is the size between the bid and the offer, okay? So the guy who makes the spread smaller is that market maker who you think is your problem. The guy who's very often not taking it down to your stop order and taking you out, that's your market maker. The guy who's there to create a smooth and active market, that's your market maker. He's a good guy. He's not the bad guy. So do me a favor, if you do your homework and you learn the discipline behind successful day trading and follow the rules I just gave you, those 5 rules, if you listen to me and follow those rules, you will be a 50% better trader. And this is a probability game. Have a plan when you get into a stock. Never get into a trade without a stop order. Take a profit when you can, move your stop up to break even. If you're losing money, turn the machine back off and never turn a winning trade into a losing trade. Those 5 simple rules will make you a 50% better trader. None of them involve any kind of espionage or underground BS that you think the market maker's out there to screw you. Trust me, if I can say anything from the core of my heart, from an honest place, these guys are way too busy. The market maker down here, my friend Mr. King, he trades almost 700 stocks every day, non-stop, all day. He's in oil. Oil's been wild over the last couple of weeks with what's happening in the Middle East. He has to make money in those stocks for his firm, right? He has to protect the corporation who he represents. He's not worried about your small stop orders, even your large stop orders. So just get rid of that, like take that shit out and behind the barn and shoot it, because it is not a fact at all.
Awesome. Now, a question I had is, obviously, as you've been in Wall Street since 1985 when you started, what's the, let's say, story, the most insane story, most Wall Street story you'd have to share?
You know,
something that happened maybe?
Yeah, there have been so many fun things that have happened down here. Look, I could talk about the crash of '87, the crash of 2000, the financial crisis of '07, COVID. At any given time during those crises, there have been stories that I could tell you about wild and crazy stocks, wild and crazy times. I could talk to you about the day that Jules Marcus, a market maker, had a heart attack on the floor of the stock exchange, and they were trading over his body because they could not stop trading until the medical examiner came. I could talk about some of the more fun things that we do down here. There are a number of sort of gags that we do down here on the floor. We don't do them as much anymore. When a guest would come down to the floor and you would be all enthralled by what's going on here, someone would come up behind you and they would put baby powder on your shoes, right? And then they would surround you and they would start tapping their feet and they would say it's snowing in New York, and you'd have no idea what was going on. You'd look down at your beautifully shined leather shoes and they were full of baby powder. They actually powdered George Bush, the President of the United States, shoes once. So that was an interesting story. I had a situation. There was a comedian named Gallagher. He used to be in Vegas and who used to smash watermelon all over people at his show in Vegas. And he came down to the stock exchange once and I was talking with him. We look alike. He's sort of bald with very long hair. And someone came up behind him with a piece of watermelon, and I had shaved my head at the time. And for charity, actually, I raised 25 grand for charity for children. But while we were talking, he put the watermelon on my head and smashed it, and watermelon went all over. I ended up getting fined $5,000 by the stock exchange for conduct on becoming a broker. You know, I could tell stories about we run the largest and oldest charity on the floor called the Member Handicapped Children's Fund. We raise tens of thousands of dollars every year for charity. When somebody down here was going through something where they had a sick family member or they were going through some trials and tribulations, we would walk around the floor with a garbage can and everybody would throw 20 bucks in and we would raise thousands of dollars for our fellow brokers. So it's the most philanthropic group of people. If anybody was going through something, everybody was there to support each other. It's a really tight-knit family. So look, in the midst of craziness of money, right, when we don't get a lunch break, we stand over the garbage can and eat a sandwich because we're always trading, right? So our world is incredibly stressful. It is the most stressful job next to air traffic controller in the world. So imagine that, right? But in the midst of that, we're always looking for some way to defer the anxiety and the stress around it. And sometimes it involves a bit of a joke. So it is the most wonderful group of people in the world, the most philanthropic, helpful, loving family people in the world. It is people with a really great sense of humor. It is people who will give you their last dollar if you need it. You know, and in the midst of all that, it is a place that runs the last bastion of capitalism in the world. It is the greatest marketplace in the world, the greatest financial institution in the world.
Actually, question I have is,
yes,
I usually say trading is not for everyone, and for me personally it was a passion, that's why I do it. I've never done anything else. However, investing should be for everyone. Do you actually agree with that?
I do agree with that in 100% way. So trading is not easy. It's really quite difficult. The psychology behind it is really quite brutal. And so it is not for everybody. So some people, it is a way of life. For some people, you get it. It bites you. You get the bug, and it's the only thing you ever want to do. It wakes you up in the morning, and that's how it was for me, and clearly it was for you. Investing, we are the greatest consumer. We are the greatest consumer generation in the world. We love to buy shit, right? We have to have what we want when we want it, right? You'll buy some on Instagram and then pay 3 times as much to have it delivered yesterday, just because you have to have it immediately, right? And think about that. We have, you know, we need the next sneaker, we need the next iPhone, we need the next everything, right? When at the end of the day, everything we're buying is, the minute we buy it, it goes down in value. So one of the things I'm trying to teach people to change that narrative is to invest in stocks and not stuff, right? To start putting some of their money to work, build a portfolio. You don't need, look, I try and tell this to kids all the time. If your iPhone 13 is not broken, you don't need the iPhone 14. Go buy yourself some Apple stock. If you have 12 pair of sneakers, you don't need another pair of Nikes. Go buy some Nike stock. And this is not financial advice. It's just a mindset. The mindset is, at the end of the day, we love to buy shit. But if you go into your closet, you've got so much stuff that actually has no value except that moment you bought it and it seemed like a great idea. And at the end of the day, you maybe wore it once, it's sitting in the back of your closet, and that 80 bucks, 100 bucks, or 300 bucks could be way better spent building a portfolio by buying some companies here that may potentially go up in value. Think about it. We are very loyal customers. We love our Starbucks, we love our Nikes, we love our Apples, we love all those things. So if you love a company and you love the process and the people and the product, you may want to consider buying the stock, because at the end of the day, it may bring you a stronger portfolio in the long run.
Completely agree. Hey, it was awesome.
Pleasure, man. Yes.
Really. Thank you.
My pleasure. That was good.
Thank you so much.
You got a lot of fucking information out there. And now it's time to go to work.
Si cette vidéo t'a plu, alors tu vas adorer celle-ci, qui est un mini documentaire sur 24 heures dans ma vie à New York, avec justement un petit peu le back-end, le backstage de cette journée à Wall Street.